Hey Mad family and friends, George Samios here for the October 2022 RBA announcement. They've put the cash rate up 0.25%. Now I read the statement from the RBA and look, to be honest with you, it's almost like they copied and pasted last month's. They're trying to combat inflation. The only positive thing I saw from it is they reckon that the rate increases are working and that hopefully they're going to stop them eventually and come back again, which is good. It's what I want to hear. But let's dig down and see exactly how this affects you, how that'll affect your borrowing capacity. What are your options regarding fixed rates? What are the 1 to 5 year fixed rates looking like? What this increase will look like in terms of your increased repayments on your variable rates at the moment. So let's dig in. Okay, so let's look at the current variable rates now. So at the moment, they're about 4.3%. Now look, there are rates lower and some higher, but if I was to do an average, 4.3% would be it. The RBA put it up 0.25, meaning the new approx rate's 4.55. Now let's have a look how that's going to impact your bottom pocket. On $1 million loan with a 0.25% increase, guys, unfortunately, $50 per week increase in repayment, or that could be $100 a fortnight or $208 per month. Now some people's loans are $500,000, which means it'll be about $100 a month difference. Some people's loans are more than $1 million. This is a bit of a guide of what sort of impact it'll have. Next, guys, I want to show you what your options are. So yes, you can go variable, but there are fixed rates available. Now they aren't significantly higher. As you can see there, to fix for 5 years, it's going to be about 5.79%. Now that's more than 1% difference. So on $1 million loan, for argument's sake, that's an extra 10 grand a year to fix. It'll actually be more than that. So fixing is an option. Definitely weigh up whether it's right for you. There's a lot of things to consider when you fix. I have done a lot of videos on pros and cons of fixing. There's limited extra repayments you can make. There could be huge exit fees if you want to break it. So you really want to know where you are going to be during that fixed period before you commit to anything like that. And not all the time do you win with a fixed rate. It's like getting insurance. You don't know when you're going to need it. But if, for example, the rates kept going up and you locked in, you might thank yourself. But I just don't know how much longer these rates will go up. As you can see, the trend of the RBA, it went to 0.5, now it's gone to 0.25. Have they got to where they needed to get to? Will rates start going backwards? The problem with fixed is if you lock in for 5 years at 5.79 and the rates start coming in lower, you're locked in at that rate. Alright gang, so let's now show you what impact this will have on your borrowing capacity. As rates go up, it also impacts how much money the banks will borrow you. So we'll just put 100 grand income here. Now with NAB you can borrow about 608, Combank 610, Macquarie seems to be the most, 620. But if I add the most recent increase of 0.25, you can see here that it drops down to NAB is now 594, whereas before it was 608. So that's pretty significant. It does make a big difference to your borrowing capacity. Not huge. If you look at it collectively, the last 3 months, 0.5, 0.5, 0.25, we're talking 1.25%, which was massive. So we've noticed in the last couple of months, people's borrowing capacity as a whole from 3 months ago till now has dropped hundreds of thousands of dollars in some cases. Key takeaway point, if you're pre-approved and you buy within the 3-month period, you should be right. Check with your lender. However, if your pre-approval expires and you've got to reapply, they will be using the new assessment rate, which means you probably won't be able to borrow as much. Family and friends, I don't like reporting rate increases. It's not fun, but I want to keep you guys up to date so you always know exactly what's going on. If you are experiencing mortgage stress, please watch this video we've done with a financial planner to see how we can help you. But of course, if you just want to pick up the phone and speak to us, there's heaps of things we can do for you guys. Do we refinance you, potentially extend your loan term? Do we try and get you a better deal with a different bank to drop the rates? There's a lot of different things we can do as mortgage brokers. So thank you for watching and have a mad day.